Good afternoon, traders. This is Christian from Trade Group, and this is your end of day market recap for Wednesday, the 4th of March. We had a nice little rally today. Just to give you the raw numbers here, SPY finished up 0.7 of a percentage point. Qs were up 1.5%. IWM gained 1%, and the micro caps were up 2.1% today. So I'm just going to start with the chart here for a second. I'm also just going to mention to you as well what I thought was interesting. I don't always talk about economics, but we did get a very interesting services ISM services number, which I tend to look at the ISM numbers because it's more of a leading indicator. This is just economics 101. If you've ever taken an economics class in college, you know that there's lagging indicators, coincident indicators, and leading indicators. And sorry, there's a headline that just hit Bloomberg. It says Morgan Stanley to lay off about 3% of workforce. But ISM is a leading indicator, just like stock prices, and is a little bit more meaningful to me than something like GDP or something like that, which is a lagging indicator. So that number today that came in for ISM services was 56.1 versus an estimate of 53.5. And that really kind of got the market going. That number came out at a half hour after the open, as ISM data always does. Reminder that anything above 50 is expansionary, and we are more of a services economy than manufacturing. Hence, the market seemed to take the good news as good news and kind of ran with that. The issue that we have here with this SPY chart is that we're basically just back to where we were a couple days ago, and there's nothing really that positive about the overall trend here other than we're just back into the sideways range. I would note that something is, and by the way, we are back inside the March value area, which I do think that that's a positive, but really we've got to get on the right side of the 50-day moving average. And since we've been in this range for the last couple months, we've kind of been uh, have what's the right word that I'm looking for? It's basically just means that we've kind of been deteriorating a little bit because we've been spending more time below the 50-day moving average the last couple of weeks than above. So it's got a little bit of a bend to it at this point. Now, could 1 or 2 days of positive price action take this back up? Sure, it can. Qs, I'm going to spend a little bit more time here because I had mentioned in yesterday's video, the title of the video was kind of like the good and the bad. The good that I came up with, or the positive, was that we keep coming down to the bottom of, or excuse me, the top of the value area for the year, and we are bouncing from that. So that was the good. The bad, and I think you have to. I'm just going to zoom in here to the 1 hour chart, and I was talking about that we've been making a set. Again, this is very near term or short term. Was that we were making a series of lower highs. Well, today we broke that trend. We broke above the trend line, and we did actually, the Qs here, which is different than S&P, which I'll show you in just a second, is different because we actually got above Monday's high. Again, all of this, you may think, oh, we're moving in a headline market and headlines drive markets. Yes, they do. But then the technicals tell us where there's supply and demand. And as you could see from on Monday, all we did was we didn't really change the trend here. We just got to the top of the value area for the week. That's the blue box. The gray box is the value area, for the month. And we basically just we stopped right at the top of the value area. So for now, it is very methodical in terms of where we are going. And you could see, just as I did in the 1 hour chart, you could see the same thing, is that we tagged 612.86, and we're not really able to do that. And just as a reminder here, and how to use the value areas, is that on a very just basic from a very basic standpoint, is when we're trading above a value area, that means we're trending higher, and we're not in sideways action. For now, going back to this, just to kind of emphasize again here, we're just in a range, and we're right now, we explored the bottom of the range, and we got to the top of the range, which is the top of the value area for the month, and we stopped right there. So That's what I would be watching for confirmation of a break higher, which is 612.86. All right, that's the level to watch. I'm just going to round this out by looking at. I'm going to mention SPY so that you can see the difference. You can see SPY has not gotten above Monday's high. So Qs are showing a little bit of relative strength, but they need to continue to turn the corner. IWM, same thing, not able to get above. Not not able to get above Monday's highs here in IWM. Uh, Again, could the picture change and could it improve? Of course it did, but for now we're still not really making any headway or traction in the SPY, the Qs, in the IWM. Just to look at what the RSP looks like. Yes, this really broke down decently yesterday. We did close inside the value area, which was good, but and now we're coming back to the 20-day moving average. So this was such a nice trend. So now things just get a bit messier. I was also going to show, just to talk a little bit about tech. Here's the XLK ETF, which has been underperforming. Note where this stopped as well. It had some trouble, and this big, that pink big value area is the value area for the year. Right? Price needs to get above that. And again, tech is important. It's about 33% of the overall S&P, so important. I would also look at let me just get the right ticker, because these tickers are a little bit of a pain in the neck. Something else that I'm watching is the equally weighted S&P. Sorry, equally weighted tech. Notice how tight this price action is getting for the equally weighted tech ETF. It's very tight. You can look at this on the weekly chart too. You could see all this, back and forth price action where it keeps exploring higher levels and lower levels. Right now, it's not moving, but this thing is going to break big one way or another. All right, so I would be watching for kind of hints of that. I think today was interesting because, so let me go now to the spreadsheet, and then we'll go review a couple charts. Let's see if I can just. They did something new in this application, but here we go. All right, so you can see for the day, these are all good things. I think and how I'm going to summarize this is, first of all, the VIX fell 10% today, and it gets us back to where, right back to basically about 21 again. So again, that means that volatility is still present, and it's we're still in a heightened volatility situation. And I would really, for confirmation, look for the VIX to get back under 17. I think that would make calmer markets, and possibly more trend like markets. But keep in mind, if we do go down to 17, that obviously the market will be rallying in that sense. So it might be a little bit after the fact, is what I'm trying to get at. Bitcoin had a big move today, up 7%. So let's talk about that. There's been this correlation between software, so I want to review those charts, but I also just want to talk a little bit about the FANG stocks, which did pretty well today. And it's one of those situations. I'm just going to talk about trading philosophy here for a second, but it's one of those things where I've been pretty negative on the FANG stocks, the Mag 7 names, mainly because of the capital expenditures, but also the price action. And I've been pretty right about that. I've been pretty right to basically say stay away from some of these names, because they did not have good earnings reactions. Um, and usually that's a clue for me to kind of stay away. But so we're going to start with the IGV ETF here, right? But at some point, the market is made of supply and demand. Prices keep falling. You're going to find buyers a lot of times, for especially, these most of the Mag 7 names are still making a lot of money. It's just that they're really spending a lot of money too. But it doesn't mean that these things can't revert back up. So from this big decline that we started to see, and really I talked about how we started to see it right in the beginning of the year, this breakdown. We're starting to kind of move higher here a bit. This was an people are going to get mad at me if I say this, but I'm still going to say it. This was the Centrini bottom, when that big article came out and everybody said, "Oh no, what does this mean for jobs and everything else?" And the market went lower on that. Since then, again, it was kind of like a magazine cover for like The Economist, right? The writing was already on the wall. If they would have come out with that article 2 months ago, I would have said good article. But they came out with this article here, and since then we've been rallying. IGV has rallied after it got all that attention. Also, a lot of volume here coming in. So this is a bounce. And it's a bounce and a downtrend. For it to advance further, maybe let's say up to the 50-day moving average, it's got to stay above 84.94. What I think is pretty good too is we're starting to see some of the group separate, which is what you want to see. You don't want to see the whole group move together, but you're starting to see some separation. Um, AppLovin, I think, had a pretty good day, right? That stock was up 10%. Notice that this is further above the value area. Palantir had a good day, which I got long some of this today, and that's now moving above. Am I going to stay in this trade for a long time? No, absolutely not, because it's a counter trend trade. And we know that counter trend trades, the price usually stays in the direction of the trend, which is right now below the 200-day moving average. The FANG names, we saw some option positioning yesterday in Microsoft, didn't close on the highs, and I still think this is kind of challenged. It's going to have a lot of resistance above, but I'm not calling, to say that this thing is going to keep going down either at this point. Google hasn't really participated, which was my kind of favorite of the group before this reported earnings. Still is kind of struggling and may need some more time. It actually finished flat on the day. So that's my kind of thoughts for overall tech. I would say this too. What's been kind of complicated the situation with everything that's transpired with Iran over the weekend is that just the market rotation that you're seeing right now. So, for example, what didn't do well today, or was probably the worst group in and around the tech space, was the optical names, and it's just right now. It's as Helene Meisler likes to say, it's an either or market. It's not an everything exactly go up right now. Light was down 2% after getting a nice, I think there was an analyst price target raise in this. And this whole group went down today. Now, Sienna reports earnings tomorrow, so that's going to maybe drive the group. And by the way, I'm not trying not to talk negative here. Just the fact that they were down today. AAOI was up 4.6%, by the way, today. But um, but they're just need of a break, right, after a major run up. And again, remember, like, so by the way, there was some option positioning in this name today in Corning, in the April, I think it was the 190 calls, which are pretty far up, but it's down 1.8%. Yeah, and a check back to the 20-day moving average wouldn't be the worst thing in the world, considering the stock in the beginning of the year was about $85 and is now 144. These are big moves. So just keep that in mind. Any other things that just a couple other sectors that I wanted to go over. Semis, which was under pressure yesterday, not a bad looking bounce back. Let's see if they can maintain that value area that's right around 379. And also, one other group that I've been watching too is the healthcare space. This biotech getting back above the value area for the month would be pretty good. All right, so that's a couple things that I'm watching. Broadcom after hours, I don't think is moving much. Last I checked, let me just go to my it's actually rallying. So this should be good for tech to see Broadcom rally a little bit. This is not a name that I've traded in a while. It just hasn't acted well in a while, since basically the last earnings report when it fell. Right. That's always, by the way, a marker for whether a company is going to be in demand for the next quarter, or essentially dead money. And Broadcom was really dead money from a bad earnings report. Again, that's probably about 85% of the time when a company has a bad earnings report, they usually just they don't act well and they underperform. I think that's basically it for now. A couple other names. I always try to give you a couple names that I'm watching. I did go long Corning, by the way, towards the end of the day, and Cisco is starting to act well too. This name fell. I believe that the report was decent, but it may have been their guidance that was a little bit weak. So in any event, I'm going to give the same message that I gave yesterday at the end of the day. Was that in terms of the seasonality playbook, right? We are in the right in the middle of a weaker seasonal period. February was weaker seasonally wise. The first part of March is supposed to be weak. And then after we get through kind of the first part of March or the first half of March, seasonality is really supposed to be strong the end of March as well as April. So right now it's kind of trying to play a little bit of defense. It's one of those things where I always encounter this issue with newer traders. Newer traders want they want the same things all the time. I want to be able to make the same amount of money every day, right? I want to be able to do this or that every day. But the market doesn't work like that. There's times where you have to play defense. There's times where you get into a trade and you have to take the trade off right away because the market's just too dicey. You have to respect the overall volatility if you're doing a good amount of swing trading and understanding that a lot of trades aren't going to work and you may have to cut them off pretty quickly, right? And playing deep playing defense in those situations, as they say in football, defense wins championships. So while there's uh, weaker seasonality, higher volatility, and while the SPY and the Qs are still underneath their 50-day moving averages, it's defense right now until the market looks a bit more healthy. I'll leave it there, guys. Have a great night. See you tomorrow.